Okay, everybody, here we go. It's me, Gregory Mannarino. Monday, January 30th, 2023. We're going to talk about the market, but just real quick, I had no idea so many of you were into watching drag racing, cars, and I wish I would have started putting out videos like that a long time ago. Anyway, just real quick, so I tore into that engine yesterday after I broke it, or I don't know what happened, but I tore into that motor. I didn't find anything major. Valve train's fine. Lots of compression here. Maybe it's a fuel delivery issue or an ignition problem. But I promise I'm going to find out the issue. I'll let you know. I'm going racing next weekend, one way or the other. So I'll keep you on top of that. With that said, people, let's move forward here. Let's talk about this market. So what do we got going on this week? You already know. It's this big Fed meeting. You know, look, the Fed's running everything. They are the freaking puppet masters. You know that. They are the government. So, as I explained, Wednesday, I believe we're going to get a 25 basis point hike to the federal funds rate. I think it's baked in. Could I be wrong? Absolutely, I could be wrong, but I think that's the case here. How's that going to affect the market? Well, it's what comes out of its mouth. Whatever comes out of its mouth during his Q&A, that's going to move the market. It's not so much really, honestly, like I said, I think whatever the Fed's going to do is already baked into this freaking market, which makes no sense anyway. It's all just propped up, nonsense, garbage piled on top of whatever you want to pile it on top of. That's clearly the situation here. And just to push that point home, just as a piece of news that we got this morning. So we already know, you and I, and this is no surprise because we've been talking about this for years. U.S. manufacturing and factory activity, it's over. It's over here in the United. It's been over for a long time, but really the nails in the coffin are there. So U.S. manufacturing investment is now at its lowest level ever in history. So that is a big tell as to where we are going here. The economy continues to free fall as central banks around the world continue to crush their economies, none more so than here in the United States with the Federal Reserve raising rates in a supposed mission to eventually, sometime in the future, because it's a miracle, it's going to happen, stop or reverse inflation. Has done nothing of the sort. Nothing. And you and I knew this since day one because I've been, screaming from rooftops about this. What the Fed's doing is a joke. And there's not even the mainstream propaganda. They don't let you know a damn thing about the truth. It's all just a script. It's garbage. And what bothers me is, again, have you heard how contracting the money supply would really do the trick to control inflation? No, you haven't heard a word about that from any of the mainstream channels. And that should tell you something, because that's the key here. If they really wanted to slow inflation, well, they would contract the money supply. But you see, they can't do that because central banks, the Federal Reserve, is going to continue to inflate on an epic scale, and you all know that here. So what are they going to do? They're going to continue to crush the economy. You see what's going on here. Kill the consumer in the literal sense here, and that's going to eventually help everyone. Everyone's going to do fantastic because of that. Oh, yeah, just ask our mummified president. He'll tell you that. Anyway, so this morning here, there's this fear in the market. There's a little fear here. Nothing major. You're not seeing this knee-jerk reaction into the dollar. The relative strength of the dollar this morning is flat. Okay, but you got global bond yields creeping higher. MMRI did also come up. It's 225 the last time I looked at it, but we're still below that 250 line in the sand. I'm telling you, that's what it seems to me. 250 is the line in the sand here. I don't believe they're going to allow that to happen again. Forget about hitting 300. When we hit MMRI 300, you know what happened. So I think that they're going to put a lot of effort into preventing a sell-off here in global bonds, which of course would cause yields to rise. The scheme is keep rates suppressed, keep buying the debt, keep pumping the market, period. That's where we're going to go. with regard, there's a couple of other things we need to keep our eyes on here, and you know what I'm talking about. At least I think so. Energy, crude oil, and again, I hate to say do for anything, but these things have had a nice run up. The energy sector, big energy is windfall profits yet again. So, I mean, if energy decides to pull back a little bit here, which would be bullish in the longer run here, as the U.S. dollar purchasing power continues to be sucked out as central banks are in a race to the bottom here, I wouldn't be surprised to see a pullback here, and that would, of course, affect the market. But again, look, use your own brain for a nanosecond, okay? If we understand the game, and I think there's nobody out here who has a better understanding of the game than you, that is central banks continuing to inflate, the propaganda ministry selling a lie to the people of the world, it's not going to stop here. Central banks are not done. They're going to continue to pump the market at the same time, creating dependency on the system. That's the key to this thing too. Central banks have to create, none more so again here than the Fed. Their mission is to create dependency on their system. You know this already. I've talked about it a million freaking times. Then eventually bring this system down and issue in a new one. Period. That's where we're going here. So understanding that, it should be easy for you and I, at least, to know what we need to do and why we're doing it. We're going to continue to bet against the debt, become our own central bank. Gold, silver, hoarding this stuff. Silver, my favorite asset of all time. You know that. Nothing's changed. Commodity exposure. Now, let's see what happens with commodities too. Commodities have had a pretty nice run as of late. They also could use a bit of a pullback here. But you and I, look, if you are like me and have exposure to commodities, okay, you're holding these things right now. You're owning them. Not because you think by tomorrow or next week, there's going to be some miraculous gain. No, we're doing these things we're positioning ourselves for the future, meaning debt market meltdown, which would put pressure on the stock markets around the world, probably more so here in the United States. We're going to see a meltdown here on an epic scale, and cash is just going to move into commodities. Remember, it doesn't fly away, cash, and go to money heaven. It just doesn't grow little money wings and fly away. No, it doesn't. So you and I are putting ourselves in the right spots. I really believe that. And, look, always use your own brain. Think about these things. Does it make sense what I'm saying here? That this is how it's going to play out. It has been working that way. I think it's going to get to an extreme level moving forward here, period. So anyway, stock futures are lower this morning, as I said. Cryptocurrencies under a little pressure. Bitcoin still around 23,000. Gold flat. Silver slight gain this morning. Crude oil under some pressure here. Look, today and tomorrow, this market's gonna, act a little freaky, anticipating what's gonna come out of the mouth of the Federal Reserve on Wednesday. But I'm telling you, I think we have a lock on this. It's a 25 basis point hike, and then depending on what comes out of his mouth, Powell, the thing, the whatever it is over there, and that's gonna really set the stage here. But let's also put another thing into perspective. You know what they say? As January goes for the market, so goes the rest of the year. This January has been pretty nice. Again, the market doesn't make sense. It's completely detached from reality. I think the detachment from reality for this market is going to get even more extreme moving forward, because that's the game. That's what they're trying to do. Keep the market propped up. It gives the illusion that things are good. People look at the stock market and they think it's an economic indicator. The stock market is not an economic indicator at all. There's no connection at all. Stock market, economy. This gap, as I've been showing you for many years, is going to keep getting wider. You understand? It's not going to stop until it eventually does. And you and I, again, there's no guesswork here. You and I are going to keep our eyeballs on global bond yields, more specifically the U.S. 10-year yield, the relative strength of the dollar, and again, the Mannarino market risk indicator. There is not a better risk indicator for this market anywhere. Any freaking where, and it's free. The best things in life for free, they say. Well, link in the description of this video. It's at 225. Now, for you traders out here, real quick, I'm still putting the finishing touches on my trading system, which I've already released. It's free to everybody. I put out the bulk of it already in my free newsletter. Again, link in the description of this video. I have another piece I'm working on. Hopefully by the end of the week, I'll have that out for you. Again, it's going to go out in my newsletter, free to everybody. And I know there's a lot of traders and investors that do follow this blog. If you can figure out a way to improve this thing, let's work together on it. You know what I mean? I put a lot of time into this, a lot of thought into it. And so far I have an 80% success rate. An 80%. I'm trying to improve on that. Can I? I don't know. We'll see. I'll keep you on top of it. But look, that's all for this morning. I think we covered a lot of stuff. You know what to look at. You know what to listen for. We know what we're doing and why we're doing it, people. We can't be beat. We're invincible. We really are. Honestly, moving forward here. I will see all of you live, 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time. I'll be out here. So, you know where to find me, all right? I'll see you all later, and I'm looking forward to that. And we're going to do it. Start thinking about questions, all right? I want to get more involved in answering direct questions from you. I'll do as many as I possibly can, all right? I want us all to come together. I want us to gain a better perspective, and I want us to know each other better on a more personal level. You know what I mean? These questions don't really only have to be about the market. You know what I mean? Anyway, look. This guy here loves you a lot from the heart. I mean that. Please share this stuff. Get it out there. And I will see you live later.